Hello, good afternoon, everybody. I hope you can see my screen. So today's webinar is going to be a very interesting one. Actually, I just realized something that I want to talk about that I need to hear. This, as you can see on the screen, this is average true range indicator. So this indicator, before even I read the definition of it itself, is a very good thing that every trader needs to be using. If you are trading Forex, you using this indicator. It does not tell you where the price will go in the future. Basically, just shows you what is currently happening. It shows you the volatility that is currently in the market. So the definition I have here, which is this, reads like the average true range is a technical analysis indicator that measures market volatility by decomposing the entire range of asset price that period. Specifically, ATR is a measure of volatility. It was introduced by this technician, J. Wallace Wilder Jr. in his book, New Concepts in Technical Trading Systems. So a simple definition is this one. The indicator of average true range is a moving average of values of true range. Simple definition. So before I move on to the other slides, I want to state clearly how I came about that definition, the simpler one, because I noticed that everybody just needs to know exactly where everything is from. So just look at this screen now. The very right end, we have this under this option, menu option. We have the first one. Yeah, we have the help topics, which is this. We want to find exactly where do you find such information. If you have an indicator on your screen, how can you be able to read more that particular indicator? Like you have this list of indicators, these ones. Where can you get all the information? So that if you see like this one, but you don't understand exactly what it means, where can you read the information about it from online? So the information about these indicators are not only online, they are also on this MD4. It comes by default with this platform itself. You find an indicator here which you don't know exactly how to use, you can just find the help files under the help option, F1. So we give it time it loads on our screen. Then I'm going to explain clearly. There already. We have want to write search ATR. Just a second. So we have it, ATR. To search so that you're able to see this is exactly where I get the information. Because if you have any indicator that comes by default by MT4, but then you don't know exactly where to get the information that indicator, you can go straight to the help option. Move to help option. Under the search option, type that name of that indicator, then click search, enter, then the first one should be that indicator. So as you can see here, the same thing applies. Same information which I just read on the slides, the same one which is written here. And as you can see, this is when it has been attached on the screen. And then you also have how it is calculated here. So that is simply if you want to know exactly what an indicator does. If you want to know how an indicator works, then you can find the information at the help option. So the indicator which we are using, which we are going to look at now, the average true range, actually falls under a group of indicators called oscillators. Yeah. What oscillators does is when price is above a particular level, it is considered as being overbought. And when price is below a particular level, it's considered as being oversold. So when price goes above a particular level, that's overbought, which means the price should reverse to the lower side. And if the indicator goes below a particular level, that means it has been oversold, which means you're supposed to look for a buy. So the same principle applies even for average true range. If you are looking at all these indicators, including stochastic, this we looked at. This is the one which I said, the line which I mentioned. Price goes above, that's overbought. When price goes below, that's oversold. Same thing. The same principle can be used for average true range. Listen, doesn't look very clear, but then the same thing. There's a big move up, oversold, overbought. Same thing, same thing. So you can use the same. It's not exactly that. Does this mean that when price is here, we're supposed to sell? No, that's the only difference we have. This indicator and the others, the other oscillators. So one thing. Just a second. One thing. There are certain things which this indicator does not. Certain things which this indicator does not. It may look like it shows you exactly everything that is happening on the screen, but then there are certain things which this indicator does not. The indicator does not show you the trend. That is one thing. It does not in any way forecast the future for you. It does not tell you that the price is going to go up in this number of hours. No, it does not do. It only tells you what is currently happening and what has been happening. So to add this indicator, the one which I'm having on my screen, I need to get here a group of oscillators, all of these oscillators, true range, screen. This is the indicator itself. So this line, the currently have an average true range of 53 pips. I mean 573. 0.5371. This is the average true range of the past 14 candles. The line which you are seeing here is how the average range has been oscillating ever since. So from the past, this is what has been happening. This is a decline in average true range, like this, and currently as speaking, having price here. So this should be around 0.5371, somewhere here. Another thing that this indicator does not forecast, which as I mentioned, it does not also show you, it does not measure the direction of the trend. So if you are looking at using this to enter trades, I mean to ride on trends, making some big mistakes somewhere. You must have your own indicator. Basically, the way I do it, I have just a combination of indicators that I put together so that I'm able to trade successfully. Like I have some few indicators that I do combine with this indicator so that I'm able to get the good place for trading. That makes sense. Does that make some sense? That personally, I don't rely on this indicator alone to trade. I have a number of indicators that I do use in conjunction with this one. So I only add this one to confirm certain things, to confirm how much volatile, what are the chances that the price is heading this direction, or is the momentum to that direction actually declining. So these are the things it can do and show the volatility in the market. So this is something we just read from the help button, and we had from before, that the indicator shows the volatility in the market, how much volatile the market is. If you want to understand volatility very well, then this is the indicator you need to be using. So how you use this, I want us to look at a chart. Anytime my screen freezes, kindly feel free to alert me immediately so that I'm able to look into that. This is what we have. So I've already added the indicator. Then this is what we have. Let's look at this. There's this point here, there's this move to this, a decline in volatility. The price, the average true range actually decreased even further. It continued even further up to somewhere around this point here, where it began moving up massively. So when this is happening, that this one is moving massively to the upper side, it either means that the price is moving completely to the upper side, or it's moving to the lower side. It does not mean that the trend is upwards. If you see that this is happening, it means that there's a big volatility to the upper side, I mean to a particular direction, not to an uptrend or downtrend. So what confirms for you the trend is actually what the price is doing. So if you have an assuming you now add like you attach a moving average to this chart. To attach maybe some moving average to this chart now. We have exponential moving. Now attach this to your screen. Then this happens that the volatility all over increases. What that means is we are continuing massively to this particular direction. So you need to look for a sell. This does not show you, the indicator, the one ATR, does not show you that we are continuing to the lower side. What does that is one which I've just attached on my screen. So I'll use this one. The indicator is really useful if you understand where the price should go overall, such that when there's a sudden increase in volatility, possibly that direction is now dominating. So you enter trade in that direction. So another thing, just look at this. This rates 0.537. It's like 537 pips. Then another one, we have this 64 pips. Okay, this is daily an average range of 64 pips Euro USD. Then you also have this 101 pips. The past 14 days, the average daily range for the past 14 days were actually 101. This one was 121. I mean, this was like 21 something, 121. So what this simply means is simple, that the average daily range of each chart is different. It's not the same. If you are looking at USDJPY, the average daily range is different from the other chart, even if it's the same another JPY. They're not always the same. This 36, they are not the same. They're different. So when you're trading correctly, if you are looking for those charts, if you want to trade, if your strategy means you are trading consolidation, then you need to look for those charts where the average daily range is actually very less. The one with the least range is always this one, Euro GBP. It's always the least one. It's always the least one. So you can get, there are several, you can also check this, 62, this 91, this is 171, we have this one, this is 127, then we also have this one, it's a bit higher, 145. So if you are that person who your strategy actually involves trading consolidation, if your strategy says you're supposed to trade consolidation, then the average true range, the one you're using for that particular pair, must be very low. And if you're that person who is capitalizing on big moves, like you are looking forward to holding these big moves here, then the average true range must be very high. So focus only on charts where the average daily range is high, where there's high volatility. Looking forward to picking big long-term trades, then your charts must be having a high volatility. You must be trading highly volatile currencies. I hope that makes sense. It should make some sense. That if you're that person who is trading, you're looking forward to picking long-term trades, or you are picking big moves, then you must be trading volatile currencies. And if you're that person whose your strategy involves trading consolidation, then you must be trading less volatile currencies. So that applies whether you're using a robot or you're using just a manual. If you're trading manually or using robot, this becomes very useful for you. So I want us to look at this pair, then I want to mention exactly how personally I do use it. Let's look at this. Hit this because this is not the focus. Let's look at how this is. But whatever's been happening here, the price was somewhere here, went down. This is the indicator, the moving average for ATR was somewhere here, continued down up to somewhere here, hit some bottom there. Then it started a move to the upper side, or it hit some level there. There's a decline up to another low, which is here. Have that, have this resistance. Then we have this support. We also have this at the bottom. Okay. There's this move up to this level here. And the momentum, the upper side was actually a reversal before we moved down up to the next point, which is here. So had this, then there was a move up somewhere here. So I'm getting to something with this one. I'm not just drawing it for the sake of it, I'm getting to something with it. So have this one, this, also have this. As we're speaking now, there's this move to the lower side before it came back up. So this one is showing signs of reversing. It's like there's a decline in volatility while we're approaching a level here. So one thing, if you have a resistance or a support, then the price approaches that support at a very high volatility. There are high chances that the level is going to be broken. So if something like this happens, if you have a level like a support, then when price comes to this support, this all of a sudden it's a decline in volatility. When price approaches that level, there's a decline in volatility. The price the strength at which the price approaches that level actually decreases. That means we are possibly bouncing off that level. When price is approaching a level and then there's a decrease in volatility, then possibly you're bouncing off from that level. So if you have a level like this, assuming there's a support like the way I've drawn, then the price comes down, and approaches that level, you notice that the momentum is actually decreasing, the volatility is decreasing, then that means that we are possibly bouncing off from that level. And then the thing, if price breaks below a level, like the way it has done here, then there's a retracement. This overall based on price action alone is supposed to look for a sell. Something like this happens, that we had a support, there was a break, it came back as a resistance, continued down, came back as a resistance. So we know by price action that this is supposed to be a sell. We already know that this is supposed to be a sell. But then instead of selling, if this happens, that instead of you selling, there's actually a decline in volatility. Wait for it to continue declining up to some level. Then when it has gone very low, start buying it when it is spiking to the upper side. Best examples for this one, that what this only means is one thing, that if you are expecting a sell, but then there is no volatility in that particular market, don't sell immediately. Wait for volatility to start increasing, then you can buy from that point, you can sell from that point. So the idea is not even to understand, it's not to focus so much on what it's doing. No, first of all, what the price is doing, I actually expect a sell on this side. Then when you see that the volatility has begun to increase in that direction, then you can now say that it's confirmed, we are continuing towards that direction. The same way, if you have a sell from this point, if you have a sell from this point, price is moving away correctly. What's happening to the volatility? If volatility is equally increasing, it means you're supposed to hold on to that sell. Then the moment it begins to decrease, get out of that sell. That's how you can use this to determine how to stop the loss. That is the easiest way you can use that one. If you want to enter trades correctly, you already know I'm supposed to sell based on whichever strategy you're using. Wait for the volatility indicator to show you that you're supposed to do that direction. I mean, that to show you that there's an increase in volume. That's when you start trading. So don't trade one thing. You have to know exactly that this pair moves averagely this number of pips in a day. If that has happened already and you see a trade after that, don't trade it. What I mean is this. assuming this is a candle, this is just a normal candle, assuming we have this candle here, it's a daily candle, it's really big. We also have this, let me give it tails. So you have this candle here, then what your strategy tells you is that you're supposed to buy. Your strategy says that whatever you're trading, maybe you're trading overbought, oversold, something like that, but then your strategy in this case is showing you that you're supposed to buy. And on average, the current candle, which is this candle, the one you want to buy from, has actually done 64 pips, and 64 pips is the daily average range of this pair. If the price has done, I mean, the current candle has done more than 64 pips, it means we have already done more than the average for the day. So you're not supposed to look for a buy in that direction. Instead, expect some pullbacks. Don't just find yourself buying because the strategy is a buy. Confirm with this one. If a particular pair has already done the average number of pips, or it has done extremely more than the average number of pips, don't find yourself entering that trade. So if you already have this, if you already have, assuming this candle here, the one we have, has already done something like, assuming it has done like 72 pips. 72 pips. If it has already done 72 pips, and you know very well that on average it should be doing like 64 pips, then that means we've gone way beyond what we're supposed to do in a day. So you're not supposed to enter that trade that day. If it has done like 72 pips already, it has gone above 64 by how many pips? This is close to 8 pips. The best is not to buy it. Wait for the next day. Then when the next day begins, now you can now enter trade, because you will start from 0 pips on average, and it continues up to around 64, or maybe may close slightly above or slightly low. So another thing, if your strategy tells you a buy, and then you see a very good buy signal, then you realize that the current candle, the one where you want to buy from, has done only like this is 10 pips. Second, I'll change this. 10 pips. That's done 10 pips, and on average you're supposed to do 64 pips. 64 pips. What this simply means is that you have hanging around 54 pips that you can now pick from that trade. So if the price has already done those number of pips in a day, if it has gone already above 64, or it has done around 60, you can now confidently get out, because you know very well that the number of pips you're supposed to pick in a day have already reached. So there's no need for holding. That means this is what we'll earn. We'll earn 50 sorry and how much? We'll earn 54 pips. This is one way you can actually know whether you're doing the correct thing, whether you're supposed to hold on to a trade or you're supposed to exit a trade. So if you find that your signal is showing up while the price has already done more than the average number of pips, do not enter the trade. If the price has not done any significant number of pips around the average, then you can confidently pick a trade in that direction. It's really good. You'll be able to pick, if this was the case that the current candles has done maybe 10 pips alone, I still expect us to go like 54 pips. I can decide to write this number of pips and all of them. So when it hits 64, I'll get around, goes maybe 65, 60 something, and I'll get quickly, because it has already done the average before it begins to pull back. So one thing you're learning here, this indicator here is really significant. Don't be fooled. It's really, the best indicators are not the ones that shows you where the price will go in the next 2 hours or maybe 3 hours. Those are not the best indicators. The best indicator is the one which shows you exactly what is currently happening, or what has been happening correctly, so that if it shows that people have been buying before this, there has been an active buy previously. If people have been buying actively, it should show you clearly that people have been buying. Then it must also show you what is currently happening. Are we buying or we are selling averagely? So that's the best indicator. The best indicator is not the one that shows you what. Most people make the mistake of thinking or looking for the indicator that will give them an early entry and early exit. That does not exist. That such an indicator does not exist anywhere. Such an indicator does not exist anywhere. What exists is the one that shows you exactly what is happening. This indicator does not even know where the price will go in the next 2 hours. What it does, it only shows you what has been happening and what is currently happening. So it's really valuable. If you want to make good money in the forex market, you actually need to coin your strategy around this indicator. Ensure that you incorporate the daily range into whatever you are doing. And as I mentioned from the beginning, if this indicator is making like 64 pips on average, then there's another trade, there's another pair which is making around 100 pips on average. What this means, this high number means that if this pair picks a trend, it actually moves widely in that direction. And if this is true that this is less, then it just consolidates. Which means if you're that person whose strategy involves consolidation, you better be looking for something that has a lower number at this place here. If your strategy involves trading consolidation, or if you have an algorithm that involves trading consolidation, you need to get currency pairs that have very low values of this one, that move very less pips in a day. That's when you'll be able to pick consolidation. So there are many. You can basically just drag them onto your screen. This does 57, which means on average for the past 14 days, we've been moving 57 pips. At this one, on average, we've been moving even lower, which means if you're trading consolidation, focus on this one. Okay, 57. Kadchev one moves 50, and then this one moves like 102 in a day. Also have this euro card which moves 91 pips in a day. So if you want to trade consolidation, look for those currency pairs where this value here is actually below 50. I'm not saying that they're normally below 50. Sometimes they can be climbing. It's not stagnant. It's not always fixed. Again, this number here, 91, depends on the number of candles back. How many times are we calculating the average for how many days back? If you increase this value, if I increase it to 21, the value on the right hand actually increases. You increase that to 21, you can see there's a decrease now. It means on average for the past 21 days, we've actually moved 87 pips. Have this 59, 70. Also have this one 41, 8, 41, 4. So what this means, if you want to trade long term, that is, if you want to pick trades that are going to move big moves, ensure that the average true range is actually very high, very wide. And then if price has already made the number of pips it's supposed to make on average in a day, do not bother to enter that trade. Don't continue buying with something which has already expired, which has gone, it has done exactly what it's supposed to do in a day. Wait for the next day, enter that next day, hold on to for the average number of pips for that day, and then pull out. So there's another thing here which I've just seen on this side. It looks really good. This is something else which you can focus on. Just a second. Yeah, just look at this here. Look at this level here. Very good support. Support. There's a break. So for you actually this is a breakout. How can you trade this? How can you trade this correctly? So if I was trading this on correctly, if I trade this pair correctly, what I look for is this. This is support, this is support, this is support. Then when price approaches this level, we had this low around this point. When price now begins to increase, I mean the ATR values begins to increase while the price is approaching the same support, I know very well there are high chances we are going to break that level. So when this happens, that the ATR values are increasing while we are approaching a particular level, there are high chances we are going to break beyond that level. So you better be expecting a breakout when such a thing happens. So another way to confirm this is after breaking below, price continues, but then there's a decline in volume. I mean, in ATR values, they decrease even further. Wait for them to start increasing. First of all, wait for the values to start increasing. That is somewhere here. Then pick a sell after they've started increasing. That's the moment where you pick a sell, which means before the breakout happened here, I actually had to wait for the ATR values to begin increasing around this point so that I can sell it. Hope this makes sense. This should make some very good sense. That you wait for the ATR values to begin increasing. That's when it shows that there's actually some strength to the direction you are seeing. If there's a breakout, then after the breakout, there's a sudden increase in ATR values. That confirms that the direction which you've broken to is actually valid. So you need to hold on to trades you are expecting. So once the price goes up, how do I take profit after I've sold them? How will I take profits? Hold on to that trade as long as the ATR values keep on increasing. So I'll hold on basically until around this point here. When they begin to decrease, that's when I get a. So basically on that trade, took a sell, and then I was able to hold up to this level here. That's enough. If you wait for the same thing again in the future, you'll be able to pick it much better. So guys, that should bring us the end of this webinar. We'll meet again on this at the same time. So before I end this, I want to mention that if you are listening to this, maybe you're that person who holds their trade overnight. If you're somebody who likes holding trades overnight, and you trade gold or silver or any other metal, then just know that with the new FreshForex offer, you can now actually hold trades overnight without being charged anything. So whatever you're charged normally is called swap. What somebody is charged holding trades overnight is always known as swap. So with the new offer from FreshForex, you can now hold trades overnight without being charged anything like swap. So you can hold them for several days without being charged anything. Any trade you have, there is no swap to. So thank you. See you again on Wednesday next week. So I'm going to provide a link below before I move out. I'm going to provide a link where you're able to download, to get to know more about the swap thing, where you can find more information. Then another thing about this indicator, this is a standard indicator that comes with 4. Yeah, whatever MT4, whether using MT5 or MT4, it comes by default. I don't have any special link. This one, it normally just comes by default. With MT4, you'll find it. As long as you have an MT4 installed, you'll be able to get this ATR, but you'll get it under the oscillators. Here, get it somewhere here. ATR. So, and also get it here. Average true range. So thank you very much. See you.